Taxes? Taxes? We're talking about taxes? We ain't talking about the gains, we're talking about the taxes. Yes, my friends, today we are talking about the taxes. Shout out to Allen Iverson for everyone that remembers the reference to the intro, one of my favorite basketball players. Today we are mainly going to be talking about the taxes paid on precious metals you sell for a profit. And I'm going to show you how some people don't pay taxes on the sale of their precious metals. Not me though. I would never do that. But for 30 seconds, let's talk about how to save money on taxes when buying precious metals. When buying precious metals, there's lots of states that do not require you to pay sales taxes, but there's different stipulations for different states. If you live in a state that charges sales tax, there is the option to form an LLC and then complete reseller certificates. This essentially allows you to not pay taxes when you purchase, but then if you ever do sell, you need to pay the taxes then. It's like kind of a loophole, but kind of not the main point of this video. I want to talk about the taxes you pay when you sell precious metals, but wanted to throw that to you really quick. Now, this particular coin right here is a big topic of discussion when it comes to paying taxes on sales, and this is, of course, the American Eagle, and the same goes for the silver American Eagle as the gold American Eagle. Now, a lot of people falsely believe that these coins are exempt from capital gains taxes in the United States. This is not true, but there is a specific reason this mix-up happens, which I'll get to in just a second. Because you can kind of self-exempt them, so to speak, from taxes if you're the type that likes to play with fire. Little pyro, don't get burnt. Now, gold is classified as a collectible, and that means it's subject to capital gains tax. Doesn't matter which gold coin, which gold bar, whether it is this buffalo right here, or this American Eagle right here, or if it's this gold bar right here, they're all subject to the same tax. And the same goes for all the silver and all the palladium and platinum as well. It's all the same rules. When it comes to selling precious metals, you're going to pay either short or long-term gains, unless, of course, you're a little pyro. I'll tell you what I mean in just a second if you're a little lost. Now, if you buy and sell within 12 months, your profits are treated just like income. But I mean, the same goes for your losses as well. So if you sell for less than you bought it for and you lose money, that deducts from your income. Then on the opposite end, if you hold your precious metals for longer than 12 months, at that point, you're dealing with long-term capital gains. And with this, there is a cap at 28% because they are collectibles. And you may be used to capital gains of 20% with things like, more traditional things like stocks, ETFs, but there is an additional 8% on collectibles. So just make sure you don't get this confused with the more traditional known 20% capital gains number. It is 28% for precious metals. Also note that you go by the price you paid for your precious metals. So what I mean is if you bought an ounce of gold for $2,000 when the spot price was $1,900, you go by the $2,000 you paid, not the spot price. And what's cool is you can actually add in any storage or appraisal fees you paid, and that factors into your cost. So if you bought for $2,000 and you paid an additional $200 or so for storage and an appraisal, your cost is $2,200. Now, if you sell for $2,300, you had a $100 gain. And this next part is really important, and it's going to help you understand how some people get away with not paying capital gains taxes. There's two different circumstances in which precious metals dealers are legally obligated to report consumer transactions to the IRS. Number one is when a consumer sells reportable quantities of specific bullion or coins, and I'll talk about the specifics of those in just a second. Number two is when a consumer buys goods from a dealer and pays $10,000 or more in cash for the goods. And when a consumer sells a reportable quantity of specific bullion or coins, precious metals dealers are required to file Form 1099-B with the IRS. And failure to report can result in the IRS issuing monetary fines, even criminal charges against both the precious metals dealer and the customer, which is why that form is reported by any reputable dealer. The reporting criteria for bars and round sales by customers is primarily determined by purity and quantity of the individual products. So for sales of gold bars and rounds to be considered reportable, every individual piece piece of bullion must have a fineness of at least 0.995, and the total purchase quantity must be 1 kilo or more. And that's in troy ounces. For sales of silver bars and rounds to warrant reporting, each silver piece needs to possess a fineness of at least 0.99 with a total purchase quantity of 1,000 troy ounces or more. And then sales of palladium and platinum bars or rounds require the smallest qualifying quantities of 100 troy ounces and then 25 troy ounces. And there are only a few coins that are required to be reported to the IRS. And those are a minimum of 25 coins of the 1 ounce gold maple leaf, the 1 ounce gold Krugerrand coins, and then of course the 1 ounce Mexican gold onza. Then also for US coins composed of 90% silver, for example, like pre-1964 silver coins. So note that with all the above we talked about, how the dealer is required to report the 1099B form, right? Notice what's not on that list. Coins like this and coins like this. Although the dealer is not required to report the Form 1099-B, you are still required to report the gains. But maybe you got really drunk one night and you took the boat out for a spin and you started seeing how far you could skip your gold coins across the ocean. Or maybe you were really drunk the last time you went to the strip club and you thought you were throwing quarters on the stage, but it was really your gold coin stash. You didn't realize it till you got home. Or maybe they just disappeared and you have no idea where they are. Now it's here, now it's not. Magic. Or maybe you have a cooler story to share. Comment below and give me your best story how your gold coins went missing. And look, if you're the type of person that likes to play with fire, missing coins means you have nothing to report. And this is why some people like to buy and sell gold coins like this right here for cash to local coin shops instead of selling to somewhere like APMEX to get 1% more. Does it make sense? Do you catch my drift? This is also why some people get confused and think coins like the American Gold Eagle aren't subject to capital gains taxes. They 100% are subject to capital gains taxes. It's just that coins like this get lost a whole lot more than options where the dealer is forced to submit a Form 1099-B on the transaction. Capiche? All right, I think you caught my drift. Here's the other part of this. When you're buying and selling gold, you're not necessarily keeping a running ledger, right? Especially if you're using cash like a lot of people do. What this means is a lot of the time, you're estimating. And look, I think it's ridiculous that we pay taxes on this stuff, number one, but if you expect us to have a 100% accurate reporting for our buys and our sells, you should probably have a better system in place. So just take all this information and do with it what you will. Also, consider that our government is super honest. I mean, they would never cheat their citizens out of their hard-earned money through hidden taxes like inflation, so you shouldn't cheat them either. My recommendation is to be as honest as you can when it comes to your reporting. And do remember, if you don't report correctly, especially if you accidentally lost all your gold on your last fishing trip, you are playing with fire. Just don't get burned. Now, for you trust fund babies who maybe inherit precious metals, know that you are supposed to value the metals at the price when the person you inherited them from died. And if someone gives you precious metals, it's the price at the time that you receive it. So, if I buy gold at $2,000 an ounce and it goes to $5,000 an ounce, and I decide I just love my kids so much, I just want to give them all my precious metals, well, the price for them to report would be $5,000. You can also, of course, defer your taxes with an IRA, and this is done with a self-directed IRA. I personally have one of these, and I roll a portion of my traditional 401k into precious metals as I see trouble in the stock market and a good outlook for precious metals, and that would be right now. If interested in the company that I personally use for my gold IRA and you don't already have one, I listed them below for you. They've been doing me well for a very long time. They're awesome, and they have a 100% free kit to help educate you in case you don't know anything about the IRA option. I've been with them for a long, long time. And there's a lot of gold bugs that like to complain about the gold IRA, saying it's not physical gold, and they're like, you're a paper gold guy. No, silly gooses. The thing is, you can roll funds back and forth between traditional 401ks and precious metals IRAs. You roll into precious metals in times like now, you roll those funds back to the traditional IRA after the stock market is done crashing. It helps protect you and also sends profits through the roof when done correctly. Let's do an example on this. Let's say you have $1 million in a retirement account. For people who had 100% in a traditional IRA back in 2008, their value went down to about $510,000. So they lost almost half of their life savings. For people who had 70% in a traditional IRA and 30% into precious metals, their value went to over $1.4 million. Now, for people who split 50-50 and they sent 50 into traditional IRA and 50 into precious metals, their value went to over $2 million. That just shows you what can happen when you just transfer a portion in. It helps protect you. And once the crash mostly settles, you start rolling back into the stock market for much lower prices with a lot more money. Instead of losing half your money and waiting it out 10 years just to break back even, you transition with the market. It's all about diversity, ladies and gentlemen. But getting back to the topic at hand, as you can probably imagine, there's a whole lot of gold where taxes on the sales go unreported. Many times, realistically, it's up to the person holding the gold to voluntarily report that information for the tax to actually happen. And that's why people often get confused about the taxes for gold and other precious metals. The truth is that all precious metal sales are due tax, and that's just the truth. So if you like this video, tap that like and subscribe button. Just give it a little tappy. Give it a little tap-taparoo. Just tap it on in. Have a happy Gilmore of a day, everyone.